G'day there, my name's Ben Everingham and I'm the director here at Pumped On Property, and in today's video I'm going to talk about helping you as a first-time investor understand and get into the Brisbane marketplace. So thanks a lot for your time. If it's your first time, welcome to my YouTube channel or my blog. I'm Ben Everingham. I'm a 32-year-old investor at the time of recording this video. I've bought over $150 million worth of property for myself and my clients in Brisbane over the last 3 years. So in today's video, I'm going to talk about how excited I am for you. Congratulations on thinking about or starting to take those first steps towards buying your first property in Brisbane. I'm going to talk about a bit of a guide to the Brisbane market in terms of the different pockets and different areas in Brisbane. I'm going to talk about houses versus units, brand new versus existing property in Brisbane, to use the first home buyers grant or to just go straight for an investment. I'm going to talk about renovated versus unrenovated properties, as well as to use a mortgage broker or a bank manager. So it's going to be action packed. There's going to be plenty of really useful ideas for you to really get your head around the Brisbane marketplace and make the best possible first decision to buy this beautiful place up here, this beautiful market. So like I said, the first thing I wanted to say is just a massive congratulations. I remember when I bought my first investment property in Sydney when I was 24 years of age. It was a little 2-bedroom unit. I'm not a big unit fan anymore, but at the time it was a unit in Sydney in a suburb called Miranda, which wasn't far from the beach and has a good train station and a good shopping centre, and it was very affordable. I think at the time I paid $360,000 for it. Looking back, I wish I had bought a few more of them, but it was a really nice starting point. So I'm super excited for you and for the journey that you're about to embark on. I know there's a lot of information out there, and I know it feels like a very big and sometimes overwhelming decision, but hopefully this gives you some of the hard information you need to know about the Brisbane market to make a better investment decision. Because even though it's your first home or investment now, it's probably not the place that you're going to spend the entire rest of your life. So you need to put your investment hat on and make sure you make a good choice. So the second thing I wanted to touch on is a guide to the Brisbane market. So Brisbane's a big city that is broken up into a series of markets within the city. So there's North Brisbane, there's South Brisbane, there's West and Eastern Brisbane, and then there's the CBD. So in terms of Brisbane, my preferred area, or my 2 or 3 preferred areas in Brisbane, is North Brisbane. I really like the northern region of Brisbane, particularly those suburbs within 20 k's of the CBD, or those northern beaches on Brisbane. I think according to CoreLogic and Residex, there's some really good indicators of long-term potential for capital growth. In fact, some of those suburbs, according to the Residex reports that I've purchased, are predicted to do between 3 and sort of 6 or 7% per year growth for the next 5 years. So looks pretty promising. You know, North Brisbane is a huge area, and we're not talking about going really far up the highway to your Mango Hills, your North Lakes, your Moray Fields, or your Cabooses. But we're talking about more those areas between, 10 and 20 kilometres from the city in that Moreton Bay Regional Council area, as well as those areas directly on the beaches in that Redcliffe Peninsula. Now, there's obviously some really positive things happening in North Brisbane at the moment. One is that university project at Peachtree, which is going to be a university that houses over 10,000 students in the next 10 years, according to the university's website. A lot of train stations have either been recently built or rebuilt in those areas, as well as train stations for the first time connecting the CBD and the beaches in Kippa-Ring, Redcliffe, etc. through there. So North Brisbane has generally good vacancy rates, which means you can find a tenant if you need one. Good incomes, relatively, especially if you're looking in that 10 to 20k ring of the city and on the beaches there, relatively low vacancy rates and high percentages of owner-occupiers and pretty low percentages of renters in some of these suburbs. So I think there's really good 15 to 20 year potential for prices to, not do anything crazy. Property is a long-term game, but get good results. Eastern Brisbane is another favourite of mine. Obviously, the closer you are to the city and the closer you are to the beaches, generally the better the long-term capital growth. So there's some really nice suburbs out there between sort of Wellington Point and maybe Wynnum there along those beaches. I know they might be a little bit more expensive and for some of you would be outside of your price range, but they're really high quality long-term areas as well, with really good demographic factors, and obviously being the closest beachside areas to the CBD represent really good long-term value too. I'm not going to talk a huge amount about the CBD because you know you want to be buying houses, which I'll talk about in a moment, and the city's very expensive at the moment if you're buying a home. But you know, we all know that there's been a bit of an oversupply issue with units and potentially even townhouses in the CBD of Brisbane at the moment. So, you know, probably avoid that area unless you've got sort of $700,000 to $1 million to play with. And then there's some very high quality suburbs in that sort of 5 to 7K ring, which haven't gone through the crazy growth that suburbs within 5Ks of the city have gone through, but have really good long-term potential, especially if you're a little bit handy and you might want to buy an unrenovated house on a nice big block on a quiet street and maybe over the next couple of years renovate that one up. In terms of South Brisbane and Western Brisbane, these aren't areas that I personally focus on too much. Reason being, demographically, the socioeconomic demographics associated with the area, there's higher percentages of renters, more investors buying in those areas than owner-occupiers generally, and just lower average household incomes, which are things that as an investor to me aren't, you know, ideal for my investment property. But that said, I know there are really high quality suburbs in South and Western Brisbane, so if you've got your heart set on living down there, make sure you make a smart decision in a quality suburb with a low vacancy rate, with a high average income, with the low percentages of renters, and make sure you always target the quieter streets and the more premium pocket of the suburb, and definitely target the houses down there. So that's a bit of a guide to Brisbane as a whole. You know, over the next 15 to 20 years, the population growth as well as the job growth predictions according to the Australian Bureau of Statistics, CoreLogic and Michael Matusik, looks solid. Brisbane is predicted to become a much bigger city, the size of Sydney or Melbourne now, of 5 million people. It might take 30 years to become that size, but that's where we're heading. So there's some really nice infrastructure projects going in. A lot of the hospitals are being redone. We've got some nice light rail going into parts of Brisbane, potentially down the line. We've also got the under-city tunnel in Brisbane going in, so an upgrade to the Brisbane airport, and then a lot going on the Sunshine Coast and Gold Coast as well. So make sure you be strategic. Now, your job isn't to look at every single area or suburb in Brisbane, because that's just too overwhelming. It's to really pick one of those markets that fits your budget, and then to become a specialist in one or two suburbs that really make sense to you. So now I'm going to talk a little bit about houses versus units, which is a really important decision, because I know that units can be, you know, nice and flashy if they're brand new right now, which a lot of first timers get sucked into. I also know that units can be affordable in some suburbs and therefore represent an entry point. But what I like to do is look at the history of the performance and the data. And if I look at the history of units versus houses in Sydney, Melbourne and Brisbane in the last 20 years, I can see that houses have outperformed units almost every single year. At certain times, units outperform houses for 1 or 2 years, but generally the long-term trend is that houses outperform units by between 1% and 3% per year. Now, let's just think about that for a moment. If you're going to buy a $400,000 property in Brisbane, a unit or a house, and you hold that property for the next 15 years, and the unit gets you a 4% growth rate, and a house gets you a 6% growth rate per year for 15 years, the difference in your money in your pocket is going to be just over $235,000 more growth if you buy the 6% return versus the 4% return. So again, I don't have a crystal ball. I don't know if units or houses are going to do 4 or 6% in Brisbane in the next 15 years, but we know based on the history that houses outperform units. So if you can afford that product, that is definitely what you should be focusing on. Again, remembering the fundamentals and buying quality. Now, I know there's a first home buyers grant available at the moment. At the time of recording this video, it's 2018. Obviously things change. For existing houses, I think you get a bit of a stamp duty exemption. But I think with brand new properties at the moment, you get a stamp duty exemption. You also get a bit of a building boost, which is paid for by the government So in relation to that, obviously you've got to understand that that building boost can come in the form of you know, an upfront payment from the government to support you in the purchase of a brand new product, whether it's a house, a unit, or a townhouse. There's positives and negatives to buying existing property versus brand new. Some of the positives of going the existing route from my perspective is you generally can buy and afford a higher quality suburb by buying existing. You can also afford a better street, a better position, and a much bigger piece of land. Where with brand new, there is a benefit in going brand new if you can get the land at the right price and the build at the right price, but generally the land component's smaller. I don't think you want to be buying in a brand new estate. You know, just because those brand new estates only perform at the level that the developer continues to increase prices, and therefore can be a bit risky. As I said before, I don't like units in Brisbane. Completely avoid brand new ones if you can at the moment. And townhouses, obviously it's a case-by-case basis based on a suburb, but if you are looking at a townhouse, make sure it's a nice big one, 3 bedrooms, 2 bathrooms, 2 cars, or 1 or 2 cars, with a floor plan of at least 80 if not 120 square meters minimum, in a small group of townhouses, so maybe 6 or 12 maximum, on a quiet quality street in a quiet quality suburb. So you don't just want to go buy a townhouse in a block of like 100 townhouses, because your future valuations and growth will always be affected. So, you know, there's benefits with going brand new and existing property. Obviously it's up to you. I like both of them personally, but you've got to be very careful buying brand new that you don't pay too much for it or buy the wrong product. So in terms of the next thing I wanted to talk about, it's really about, do you want to use the first home buyers grant, which obviously gives you that stamp duty concession at the moment if you're buying existing property, or it can potentially at the moment give you the free stamp duty plus a cash benefit for going brand new, which can be huge. You know, like stamp duty on a $400,000 purchase right now could be over $12,000 or $13,000. So it's a lot of extra money to save versus going for the investment first and just putting a tenant straight in. And this is something that I thought a lot about when I was buying my first place. Obviously, I used the first home buyers grant because, you know, they were paying for my stamp duty at that time, plus giving a bit of a grant in Sydney at that time when I was buying. So it's just basically looking at the cost to benefit, or the pros and cons again of, you know, buying it using the grant versus buying it using your own savings and putting a tenant straight in. So let's use the $400,000 example again. If you were going to go buy a $400,000 home and stamp duty is going to be, you know, $12,000, and then if you were to hold that, if you were, you know, to do it that way, you've obviously saved yourself 12 grand. But if you were going to go do that as an investment, let's say you buy a $400,000 house that rents for $400 a week, so 20 grand a year. You know, in the first 6 months, which is the time that you'd be living in the property before I think you can legally rent it out at the moment, obviously those things are always changing. Sometimes they want you in the property for 6 of the first 12 months. Sometimes they want you in there for the whole 12 months. So be very careful with that. And obviously look on the government websites and get advice from mortgage brokers and solicitors on that, because these things are always changing. It could be changed by the time you see this video. But, you know, let's say you had to stay in the property for 6 months. So therefore you've lost 6 months worth of rent, which at $20,000 a year divided by 2 is $10,000 in the first 6 months of rent that you're going to lose, but you've got a $12,000 savings. So going down the first home buyers route at this stage means that you're still $2,000 ahead after the first 6 months. You might be able to move into the property and clean it up a little bit, give it a paint, tidy up the gardens and make it a bit more livable. So when you move out of it, you know, you can chuck a tenant in there, or maybe, you know, you want to stay in there for a little bit longer. The last 2 things I wanted to talk about, one of them being renovated versus unrenovated, the other being should you use a mortgage broker or a bank manager. So renovated versus unrenovated is obviously if you're looking for existing properties in Brisbane. Now, sometimes you can buy a really nicely renovated home that is cheaper than buying the house unrenovated and then doing the work yourself, because the seller is distressed, because they're forced to sell, because of some sort of, you know, loss in the family, or for some financial reason or a divorce. Those people need to sell, and they need to sell quickly. So you might be able to snap up a really nicely renovated home for a price that is cheaper than you renovating it yourself. That's one opportunity in Brisbane right now and renovated. Obviously that's a low maintenance option where you can just move in and not really think about it or worry about it too much. The second option is finding an unrenovated property and actually renovating it up yourself. There can also be an opportunity there as well, because often unrenovated properties are less appealing, which means less interest, less buyers and cheaper prices. So you might be able to buy something at a good price, go in and spend $20,000 cleaning it up and renovating it yourself over that year or 6 months you're living in it. And then, you know, for that dollar that you put in, or that $20,000 you put in, you might be able to create $40,000 worth of value. So you've actually made money from buying unrenovated, renovating it up and then revaluing it. So that can be a strategy. I've done both of these things personally. I'm just looking for value in the market. That is the key thing in Brisbane. Both opportunities exist. You've just got to be very specific when you're looking for it and know your numbers. So the last thing I wanted to talk about is, should you use your mortgage broker or a bank manager? I think I did my first property with a mortgage broker, my second property with a broker, my third and fourth properties with a bank manager, and now I've bought everything since then with a broker again. The thing I like about mortgage brokers is they don't just have one product to sell you. They can look at the whole market. Generally they have between 20 and 30 lenders. You know, these brokers can go and get your information from you and then go to these 30 lenders and come back to you with 1, 2 or 3 different solutions for you, get you the best interest rate, get you the best terms, and they can be a really valuable long-term partner for you as well. So my personal preference is to find a great mortgage broker. I've been working with mine in Brisbane for the last 3 to 4 years. If you'd like an introduction to him, please just send me an email at ben@pumpedonproperty.com or jump over to our website www.pumpedonproperty.com. So that's sort of my tips for first-time buyers buying in Brisbane at the moment. It's a really exciting time to be looking at Brisbane. There's lots of people as of 2018 moving here from other states in Australia. You've also got quite affordable prices at the moment and really good rental returns. There's lots of jobs being created at the moment, and the market's been sitting flat for quite a period of time, which is a nice time to buy. According to CoreLogic, it's at the rising stage of the market now, which is a time that I like to buy. That's Heron Todd White. According to CoreLogic, those guys have just released a little article titled will Brisbane be Australia's top performing market in the next 5 years? So who knows what's going to happen. That's why we always have a long-term, low risk to buying property. But you know, as of 2018, it looks interesting to consider the market if it's a 15 to 20 year investment. I wish you absolutely all the best with your investment. And for those of you who are looking to get some support with buying this first property, like a lot of our clients do, and maybe engaging a buyer's agency, that's where we come in. Please feel free to jump over to www.pumpedonproperty.com and click the free strategy session button, and then you can have a really good conversation with me or my brother Simon. That's more for those of you that have been looking for a while and that are in a position to buy, or those of you that are in a position to buy that really want some support to not just get a great home to live in for a little while, but to make sure you buy a great long-term investment as well. So happy shopping, good luck out there, make sure you do your due diligence, and I hope this video's added some value for you based on your situation. Good luck.